Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, May the 12th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. We're still stuck in chopping and grinding. High-level overview, wave one was done about 4 years ago. We talked about a big wave two correction. And then we're expected to go blasting off to the moon, Alice, to the moon, as Ralph Cramden would say. And that is expected to go ripping up above that 120, pushing toward 130, 140. The question is right now, is this wave two over and we're done? Stick a fork in it and we're blasting off? Or do we still need a little bit more downside? I'm not convinced that we're done. As you well know, we've been talking about this for months now, ever since we got the lower low over here, minus these lows over here. And we said, I don't think that was it. We went lower. Didn't think that was it. We went lower. Didn't think this was it. We went lower. And to be quite honest, I'm still not convinced that this is the end and we're ready to go blasting off, but I'm 100% confident we're definitely going to go eventually blasting off. The question is, do we make another lower low? Well, we're stuck at resistance and we're stuck at support, and we've just been chopping in the middle of this. So I still think more likely we're going to make another lower low than we're going to go blasting off. But I would be remiss not to mention that once wave two is over, we're going to go ripping higher and break new highs, start pushing that 120, 130, 140 area. So the question is it over here? Do we go lower? I do think we're definitely going to stop somewhere between this 80 and this 95 area, which we touched already, that low there. Somewhere in between here will spell the end of this wave two correction, and then we'll start grinding, laboring rise, blowing doors to the upside. So let's jump into the charting platform, and we can see what we've been discussing. We're stuck between resistance and support. We've been unsuccessful trying to break above resistance, and we've been unsuccessful to break below support. So as long as we continue this sideways chop and we're unsuccessful breaking out or unsuccessful breaking down, what's the other alternative? We continue this sideways grind. Still think we're going lower low for many reasons. The main reason, you go out to a weekly chart. You bring this into perspective from the COVID low over here. We have a rule here using Fibonacci's. From this recent low back in 21 during COVID, or a little bit before COVID, but during the COVID 2020 area, we made a low. We went up ripping higher to that 114 and change high. And this is when we expected 4 years ago from this high, we were going to get that wave two correction. And we expected this. The question is, how deep do we go? Are we going to stop between this 618 at 98.97 or this 786, 94.68? We already broke below the 618. And when you close below the 618 with a daily candle body, a weekly candle body, monthly candle body, the bigger the candle, the better. The higher percentage would be that once you do that, you have a 75% chance you go down and seek out a 1448. And those astute students out there, people go, oh, there is no such Fibonacci level of a 1.1448. No, there is not. It is 90% of a Fibonacci level, the 1.272. And this number comes in very frequently. So after decades of analysis and review and live charting, etc., at a 75% chance we're likely to come down here, 70% chance we're likely to visit this once you close below the 618. We've already done that. So this is why I'm still thinking we still got to go lower low. Do we get down here? Well, that's why my original target 4 years ago was to push somewhere between a 618 and a 786 retracement. But it's not coming off of the COVID low. You got to go even further out when we had this low back in 2008. So this goes way back to the aftermath of the financial crisis. And then we were pushing down in 2008. We started to make that low here. So we were looking for a 618, 786 type of retracement. And I was expecting more than likely a deeper type of correction. That's why I was pushing more toward the 786 range. So what has price done for us so far? Well, we broke below that 618 level off of this COVID low over here. So that kind of says we have a 75% chance we're going to go visit 85. That is right in the neighborhood of my 618, 786 off of the 2008 low of 70.74. Any questions? So yes, we're expecting a deeper retracement. Well, remember, all this is a retracement before we go breaking out. What are we breaking out to? My 130, 140 target. I'm definitely expecting we're going to break this prior high over here around that 120 up there. So I think part of this reversal, we're going to grind up to that 120 and break it and move toward this 130, 140. So this is extremely high probability target in my humble opinion. But the question remains, is this correction to the downside over and we're going up here? Well, using my arrows that I love to do, whether we go lower, we're going up here. Whether that 95 already is the low and we stop there and we go breaking out, we continue sideways, we're going up here, or we do the much deeper retracement, which we originally called for, we go breaking down and reach that 85, 82 zone, which is the what? Magical 618, 786 level off of this low of 2008. So this is the original target down in here. If we do that, we're still going up here. So what's the rule? All roads lead to that 130, 140. The question at the current base is, have we bottomed and we're reversing now? Maybe. Or do we go lower and we're reverse? That's why I showed you the picture when you take all this red off and you go back to this bigger picture. We're definitely going to reverse somewhere between this low and this low. And again, this is my humble opinion, but my God-given talent to read and interpret price on a chart and the ability of these to play out and eventually go, just like we talked about way over here, we will go and visit 115, 120. Went to 114.72, not too shabby. And then we talked about this 4 years ago. We're going to get a deep correction. So far, so good. Is it over? We called it numerous times. Wasn't over, wasn't over. Even as we started to rip here, a lot of people thought, well, maybe that's the end of that correction. But that doesn't look like a correction, right? It wasn't a three-wave type of move. It was overlapping. It was chopping. And even as it ripped, kind of says, as long as we remain below that 109, 110 level, we still remain bearish. And I even said it at this point. This is not the breakout. We're not going breaking out. We're going lower low. Worked out that way. And since these lows, again, not it, went lower. Not it, went lower. Still don't think this is the end. because this chopping action doesn't look like it's like, yeah, it's done. It's very clear sign. We're ready to go ripping. Even though we, again, must admit, we're definitely going to do that at some point. Whether it's over here, we're going to do it, or we go lower in this area, we're going to do it, or we even get to the original area, the 87, which is right there, or that 786, which is 80. Somewhere in this zone, we're going to do it, right? So I'm just not convinced that this latest low here is it until price proves otherwise. Now let's clarify and define what that means when price proves otherwise. All right, stretch this back out, go back to the daily. You think, well, all I see is lines everywhere. That's because we break this down on multiple time frames and we look at targets off of multiple time frames and price action. This looks a little bullish, but we've seen that before where we rally and then we sell off, we rally, we sell off, we rally, we sell off. So it's just another one of the, well, this is a critical component of the software. It's called the magic Fibbo line. And it is critical. It typically dictates where support and resistance are going to play out. So when you're below, it acts as resistance. When you're above, it acts as support. And right now, when you're below it, that's still bearish. You're not real bullish, even though you make runs. When you're below the magic Fibbo, you still have a sense of bearishness more so than bullishness. But we reviewed this each time. We got these low. Nope, that's not it. Had a little overlapping chopping correction. The proportions of that move was corrective. Corrective against what? The down move. We ultimately went lower low. We did it again. A perfect A, B, C, beautiful correction. The proportions were perfect, stating what? We would go lower low. When we got here, overlapping, we went up, we retraced. That's okay. We went up again, we overlapped here and here. That's not okay. That's continuation of what? Chopping, overlapping price action. It's still corrected. We rallied again, we pulled back, we overlapped. We did it again, we pulled back, we overlapped. And I kept saying during this whole time, yeah, the software reversed, we were expecting this to bounce. Even made statements like, I expect this to run up toward the magic Fibbo. And we did that. And even during this correction, we came down a beautiful low, high 618 retracement. That looked initial bullishness, but what did we do? We rallied right back to the 618 on the upside. So from that high to this low, we made a 618 retracement, went retest the magic Fibbo, failed miserably, and went what? Lower low. So we had a strong feeling we were going to make lower low way over here when we started this overlapping. And we did it over here when we started this overlapping. And we did it over here when we saw this overlapping. So what are we seeing again? Move up, move down, we're overlapping. Doesn't mean it's impossible. There's no possible way this thing could go breaking out. Sure it could, but it's still at a lower probability. So stuck between resistance, stuck between support. So if you're trading the euro dollar, pound dollar, expect chop. If you're trading the dollar index, expect chop. So what do? If you're scalping it, get in, take profits. Don't expect this thing's going to go breaking out up or breaking down, but it's inverse relationship. When the dollar index goes ripping higher, the euro dollar goes breaking down. When the dollar index goes breaking down, the euro dollar goes breaking higher. Inverse relationship. Why? Dollar index is made up of a basket of currencies, and the most predominant currency in that basket is the euro dollar, clearly to state it. And that's why you see a perfect inverse relationship between the dollar index and the euro dollar. All right, so we're below the magic Fibbo. That's bearish. We showed you off of the COVID low to the high. We broke the 618, which is this 98 zone over here. We're even below it as we speak. We're still below that green line with my 98 over there. That is still bearish because when you break the 618, you're more likely going lower low. So not only do I think this is a viable target on the shorter term scale, That larger term scale showed us we were likely going down to this 85, 82 zone, right? Why? That low, that high. We took the 618 out, daily candle, weekly candle body, monthly candle body, and we're still below it as we speak. 98.97, we're at 98.36. So there's still a 75% chance we go lower low. Well, what changes that picture? What could possibly price action do that would flip the script on this lower low? We have to break this situation up here, this big, huge pink box, which is a major zone from the recent high here to the low. That's part of the 618, 786 zone. So if we get above this pink box, it flips the script. We're going higher high, right? 112, 114, 119, en route to what? 130, 140. So as long as price is below this pink area, we're still more likely going lower to reverse. Once we get above this, then we definitely could call this bottom, highest probability, en route to where we're definitely going where? 130, 140. Well, even if you take the recent high here, which is not recent, 4 years ago, almost 4, September 22, we're headed towards September of 26, so it will be officially 4 years. But you get my point. Even you use that high to the current low, this overlaps that 618, 786 zone. So I'll stretch this out a little bit more so I can run my 2-point tool up from that high down to this low, which is right there in that 95 area, right up in there. And you'll see it still overlaps that 786 zone. So we clear the hurdle. We're above the 786 of even the bigger move, which states we're more likely going where? This is why I'm telling you, when we finally get above this, we're going to grind our way toward that 120, because then it automatically gives me that high probability 118, 120 level, which is what? 75%, 70 plus percent. So that's why we're going 120, and I think we're going to break that and head toward that 130, 140. So, and this isn't exact because I was just kind of pulling it, but there is a way on this platform, TradingView we use for charting, you hold the control key and you grab your little piece and you put it over the top of that level, and it'll give you the exact high. When you do that, you got to make sure you're on the right candle. If you're not, so let's zoom that in, and we'll make sure we get that exact candle. So you come back, and then now we can see that high. So you just hold the control key and you put it up over the top of that, and I still missed it. A little tricky when you don't zoom in heavily. There we go. So 109.96. So even when you do that, then you get the specific high and the specific low. All right, that's just a little chart maintenance. But you can see what flips the script. We break above the 618, 786. Now we no longer look for lower lows over here. We look for higher highs. That's how you price proves its intentions. Fair enough? So let's zoom back in on the current price action where we're stuck between support and resistance. And I'll get back to where we were. Here we go. This is current price action. So because we broke below the 618, which was still below that 618 on that bigger scale, we're more likely going lower low. So what am I anticipating? A lot of chop and grind, which we said weeks ago, we're probably going to get stuck between support and resistance, but force price to prove it. We break below this green box where we're going, highest of highest probability, we're going down here to this bubble zone. We break above this resistance level, we're going that 101, 101.50. If we can push the 102 level, there's what we call a short squeeze. We have a lot of shorts sitting up at 102. Massive amount of shorts. So what is a short squeeze? When you got a ton of pressure of shorts and then you hit the 102 and you break above, short squeeze starts freaking out, starts closing their shorts, which means they're buying it back. It squeezes price up. So we can slice and dice this like Ron Popeil. Set an alert. I don't care if it's next week, next month, next year. We close above 102, we're going to go popping toward 105, maybe 107, which is the big resistance zone, the critical zone. Say that again. We close above 102. I don't mean just like an intraday wick. We hit 102.03. That means we're going up here. I want to see that candle body close above. Then you're going to see this squeeze higher. In my humble opinion, of course. Can I read the future? You betcha. Absolutely I can. No. But that's the technical picture screaming it. So we close above 102. We're going up to visit 105, 107. That's a nice little pop. About 3 points or so. Not bad. Now, what if we break below the support zone? We're going down roughly a couple of points or so. Somewhere between that 94 down to about 92-ish in this zone right there. So, Mr. Tucson, what's higher probability? Because we closed below the 618 on the COVID low to the 114 top of 2022, we're looking more likely we're going lower low. Part of that lower low would be this bubble, of course, which would include even going lower toward that 85, which is lower than this. But that's why I still think we're going lower low. Once we get lower low, we reset and rinse and repeat. From this low, this kind of went up, a little overlap here. But if this was considered an initial move up correction, then subdivide 1, 2, 3, 4, 5. There was no overlap in that. So this could be the 1, the 2, the 3, the 4. And remember when we were hitting this high, pulling back, I told you this isn't the end. We're still going to go up and make another new high because this didn't look complete in a move up to test this high again. We did that. Then what? I warned you we were going to correct down. Did that. Then we got a daily reversal where we said we're going to go retest the magic Fibbo. We did that and we failed again. So we're just right in that chop zone. We can't break the 618 to the downside to go on to our extension targets. And we can't break the extension to the upside to go on to show extensions to the upside. We're stuck. So if you're trading this, you got to be pretty quick. This is not a long-term position trade. It is a shorter-term position at the moment. Yes, I do think the dollar is definitely going to go ripping toward 120, 130. What's a way you could play the dollar? That is the UUP is a way you can play the dollar. It's a bullish ETF, UUP. And I'm not convinced that this is ready to go blasting off, but it will. So you could buy an ETF call option. I'm looking at entering a potential 28 call option out to December, actually it's January of 2028, giving it plenty of time for this thing to make a run. And does that mean we're definitely going to get to that 130, 140 target by the time January 2028 straight up option? No, but I don't need it to get all the way to 120, 130. All I got to do is watch this start to break out. It hits that 102 short squeeze. It rips 3 or 4 points. Then this thing times 2 starts to add up in its potential. So I'm not no buy, sell to hold to tell you what to do. But this is one way I'm going to play when I have convinced, the chart has convinced me that the bottom is in place and we're ripping higher. I'm going to do a little investment in UUP and look for this thing to go ripping higher. Yes, I think it'll take a few years to get up to 130, but you could play intermittent rips on these. You know, you don't have to go up 80, 100, 200, 400%. All you got to do is get smaller moves, and price could, whether you buy options or you just buy straight up shares. For my longer term play, I'm looking to buy shares. Therefore, if it takes 1 year, 2 years, 3 years to get to that 130, 140, which is extremely high probability target, this thing will go ripping higher, double, triple. So it's not like, well, I'm buying it at 27 and when I sell it, it's going to be up at about 500. Nothing like that. Of course not. But small incremental moves is how you consistently build your retirement. You build your trading account. This is not clear and concise. Just looking at this UUP. Looks like chop to me, doesn't it? A lot of chop in here. But you can buy low, sell high, buy low, sell high, buy low, sell high. And yes, eventually when the dollar goes ripping out, we're going to go breaking above the prior high and make some new highs over here. That is the plan. But like I said, I'm not convinced that this is the bottom of this and we're ready to go ripping just yet. So back to the dollar index, which is the underlying. What's it doing? It's popping today, so UUP's made a little move. But again, we're still stuck between resistance and support. And based on the bigger picture, we're still more likely to go lower low than break out, even though 100% we're going to 130, 140 in my humble opinion. But this doesn't bode well that we're definitely breaking out now, because we got to get through this one to warrant a little higher highs, and then we got to get above to shoot these targets, and that's a big if, right, Mr. Tucson? Look at that 101.50 area. We've been stuck going back to 24. It acted as support, then we rallied up, we came back down, it started acting as resistance, and in the last year or so, resistance, 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 and even most recently, resistance, resistance. So that's tough to break 100, 105, much less to get to the short squeeze up here at 102. Even if we break this pink box, we could hit the extension 100, 101 and change, and even move toward even the 1618, which is right at 102. So even if we do that, that's no guarantee we're going to hit the short squeeze. We got to close above that. So this thing could rally up here and still go lower low. Well, I got another one for you. What if we do get that bigger move up and we test the short squeeze, right? We hit the short squeeze, we go popping up here, that 105, 107. Well, from that recent high up here down to the low, that's just a 618 retracement out of this scenario. So we could easily get up there, hit the short squeeze, pop toward that 105-ish area, and then do what? Get rejected and still go lower low. That's why it's not enough we rally to this thing and hit the short squeeze. We got to get above this level and close above it before we then say, yep, that low is in place. Everybody feeling me? So in closing, I still think we're more likely going lower low than we're breaking out just yet, but I'm going to force price to prove itself. And that is, do we close above resistance? We're going higher. If not, and we close below support, we're going lower. And what are my targets? Down here at that 94 and change, down about 92 and a half, upwards to 101 to about 102.50. So I could put a bubble there and I could put a bubble up here. And which one we're going to go to? All right? Which one are we going to go visiting? Which one? You tell me. Well, price got to prove it. All I could say is we get above, I'm thinking even that prior swing point right there, even though there's a lot of resistance up here. So you want to break it in even smaller pieces. We close above this swing point, we're going to test that 150/101 level. We get above that, smooth sailing to this bubble. We close below support, we're going down here. So we have an upside target, we got a downside target, and we're stuck between support and resistance. What does that mean for euro dollar, pound dollar, etc.? Again, stuck between resistance, stuck between support. What did I say a while back when the daily reversed? So let's buy the euro dollar. We're going to get into a position of authority. And if the dollar index goes breaking below the magic Fibbo, the euro dollar is going to break above the magic Fibbo and go test the resistance zone. Then we said if we can't hold support on the dollar and we break below the magic Fibbo, this would rally up to resistance. Did it exactly. Couldn't have stated it better well in advance, not after the fact. So is this the end and we're ready to go breaking down? Well, we're still stuck between resistance and support. And we got big support not only in this zone being the recent low up to the high 618786, but we got the big thick magic fibbo sitting in the way too. Just like the dollar's got the big magic fibbo sitting ahead above to break, this is going to be tough support to break below, and it's going to be tough resistance for the dollar to break above. But I still think we're likely going higher high. This one's even more compelling than the dollar index by itself. Why? Let's go back and revisit over here when we had this high back in 21 and we had this low back in 22. And what did we do? This is back when we got the low at 0.95. I made a bold statement. Didn't predict. Everybody predicts everything. My prediction. Well, the prophets can predict. I believe in the prophets and predicting. That's fine. But every other Tom, Dick, and Harry, I predict rain today. I predict this. I predict the outcome of that. I predict this chart, that chart. I don't predict, but I can anticipate with the best of them. That's why we call this the Market Price Anticipator software. It helps us anticipate. I digress, but you get the point. So back here, I said, let's go long the euro dollar because we're going to make thousands of pips over the next several years. So far, so good. I'm not convinced it's over just yet. We did our little, I'm a trend continuation. I like reversals. We can call reversals with the best of them. And then we look for these pullbacks and continuation type of moves. We even talked about this for years in advance that we're probably going to get a 618 retracement before we go breaking out even higher. And that's exactly what we did. That low to that high, perfect 618 retracement, and we bounced. Okay. What are we getting at? Well, from that recent high to low, we broke the 618 above that 112.80. We broke it, we tested it initially, and we finally broke it over here. That said, we got a 75% chance we're going to 127.50. We got a 70% chance we're going basically to 131, 130.99, close enough, 131. Still think this is better reversal point than this recent swing point here. That's why I think we still need to go higher high. Not only did we break the 618, we went on later. As you can see, price was above that 117 and change. Well, we're above that level right now. So not only did we confirm it over here back in April of 25, where we're going up here, we reconfirm we're still likely going up here because now we took out the 786, not just the wick, but a candle body on the daily, the weekly, etc. Zoom in on this and you can see it. Right? That green line up here, there's a candle body close above. There's a little one there, a wick here, and then we got a candle body, candle body, candle body, candle body. And right now we're still right at that zone as we speak. So we not only broke the 786, we broke the 618, we broke the 786. And again, that reconfirms what? Not only 122, 125, but that bigger picture. We're still focusing on 127.50 to 131. That's the bubble where I think we're ultimately going to reverse from and eventually go lower low. Well, what's this bubble way down here? Once the dollar starts reversing and ripping toward that 131.40, the euro dollar is going to go down to 0.8, 0.7 zone. Much lower low than this 0.95. Got it? So lower low is, this is the destination, but I think we got to get up here first before we start ultimately declining. Well, maybe I was a little shy on my target. Well, 75% chance is looming until it's not, right? How do we flip the script on this high to start focusing down here? We got to take the support zone out. We go below this green box. Then we no longer start looking for the extension to the upside. We start looking for the extension to the downside. Got it? Everybody good? So there's the big picture. So in the interim, I expect a lot of chop. We're stuck between resistance. We're stuck between support. We're above the magic Fibbo on a weekly. We're above the magic Fibbo on a 3-day. We're above the magic Fibbo on a daily. All that is still what? More bullish than bearish. So in the short term, more than likely, keep buying the dips, get to a position of authority like we did down here. We're in a position of authority and we're just sitting here chopping. We break below support, we're going lower low. We break above resistance, we're going higher high. And you got targets. That's why you use these extensions. Amen? All righty. Pound dollar, same thing. Pound dollar is more likely going higher high than we're breaking down from where we are. Same rule. Back over here in 21, the low in 22, we had a 618 around 127.60. We broke out above that way back here in 23. That said way back in 23, almost 3 years ago. 148, 147.94, 152. What? High, low. You close above a 618, that gives you a 75% chance you're going up there. Yes, there's still a 25% chance you can go the opposite direction, but I like 75% more than I like trading on a whim of 25%. Then we went on, not only then, we went on to test the 786, got a correction, went on and continued this higher to what? We closed above the 786 of that 134 area. Well, not only did we close above it, we did it for months, not only days, weeks, even a monthly candle above, still stating that this is a more viable target right now, as long as we're above our big support zone. So from the low up to the current high, there's your 618. Actually, it's further down here. There's the 618, 786 zone. So this is why I expanded that level to say that as long as we're above this green box, we're likely going higher high. Got it? And once we flip the script, then where are we going to go? We're going to go lower low. 98, 93, probably push even to the 0.8s is down here. So where's my target zone for the pound dollar in the years to come? Not days, not weeks, not months, but in the years to come. We're looking for this thing to go down toward that 98. Let me go a little bit more toward maybe 0.8, 0.9 area. So in this zone, this is still corrective to the upside, and we're going to get a lower low. What does that mean? This 103 4 years ago, and I said, it's a great time to buy the pound dollar. We're going to make thousands of pips over the next several years, which came true. I didn't say that after the fact. Go back in the archives right around that time frame. Like, it is a perfect time to go long, and we're going to stay long for years, make thousands of pips, and then we're going to look for the next push. What is this push? When the dollar goes ripping to 130, 140, the pound is ripping down here. Again, this could be years out, because I'm not convinced this is the finish, because we still got a little something left to go. Amen? So my target to the upside is here. My longer term target to the downside is here. And what do we do in the interim? Force price to prove its intentions. So we zoom this in and we're stuck between support and resistance. Kind of testing resistance. We pull back. We got the magic Fibbo. We got our support zone in the bigger green box. We're stuck. So what does that mean? I think buying the dips is not a bad idea. I'd like to come back down to support zone. We tested this down here. We bounced. We're testing resistance. Not a bad idea. Maybe we come down and test the magic Fibbo to bounce and eventually break out, but that is the plan. I said the same thing when the euro and the pound at the same breath. I said if we go breaking above the magic Fibbo, we'd make a run toward this resistance zone. What did we do? We broke above the magic Fibbo. We went right to that resistance zone. The dollar broke below the magic fibbo. It went test the support, so this tested resistance. So what happens if the dollar breaks the new support zone and we go lower low? This is going to break resistance and go higher high. So your shorter term target's up here at 139.80, 140. Your longer term target to the upside is this bigger picture, 147, 148/152. I still think this is a much higher probability reversal point and would look a lot nicer, technically speaking, to set up the next push lower. And yes, I do think we're going lower low. So referring to the software, we can see the weekly is just kind of grinding. Well, we've been just chopping, engage, disengage. We're just chopping and grinding. What am I expecting this to do? Push lower. I don't think this low is set. We got a lot of resistance above, and even those that use Ichimoku cloud, we're below the cloud testing it. We got the magic fibbo, which will act as resistance, and even the top of the cloud up here is resistance. And guess, look at the numbers. Look where that number is. That's that 102 area, right? Up there. And we got our support zone down here, which we got the magic fibbo. And this is on a weekly chart. Is this the month? I think it's a weekly. Let me make sure which time frame I'm on. So move my little chart out of the way. Yep, the weekly chart. So we're below the magic fibbo. That's bearish. And we got the weekly still pushing downward. That's bearish. We have a monthly in the process that is looking around going, well, which direction we're going? This is a chop. This is corrective. This still looks like we need another push lower. Nice big push lower, overlap, 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 overlap. Now that doesn't look like to me, ladies and gentlemen, that this thing is ready to go blasting off. It looks like it needs one more push down. The question is, do we get to what? 0.8? Do we get to that 87 down to 80? Or do we just make another lower low in the low 90s over here? That would give us plenty of time over the next multiple weeks for this weekly to continue cycling down. Amen? And the monthly, looks like a connection failure. Yep, got a connection failure. Well, I'll just finish up over here, and then when it comes back, I'll show it to you again. But looking at again, we're stuck between support and resistance. We're likely going to break out, more likely than we're going to break down. But you have your targets to the downside, you have your targets to the upside, bigger targets we just discussed. What about the euro yen, the pound yen? Based on the software being at extremes, I still think we're going to go lower. We got the initial push, hit our 500 pips take profit level. Now we bounced a little bit at a lower high. Still think we got more downside in the days and weeks to come. I believe we have it in this chart over here. There's that. Let's see, pound yen right there. Go to a monthly. We can see why we're looking for more. Yep, looks like all these are having a little trouble connecting today. Interesting. Maybe it's my, yep, not responding. All righty, so we'll come back to that in a moment. How about my NinjaTrader platform? Is it having trouble connecting? Looks like it does. Yeah, I have some connection issues right now. Okay, well, let's finish up. Needless to say, I still think we're going lower low. Pound yen, still think we're going lower low. And I would expect more downside. This looks like it's made its run. You go back in the archives in our trading platform and our classes. Back in COVID low, I made a bold statement, anticipated move. It wasn't a prediction, but I said back then, going long the pound yen would be a great opportunity because we're going to go back to this high and make a new high over the next several years. We did that. Now what? We're due for another big correction. When we hit that higher high, we dropped 2,700 points during the what? not COVID, that was during the carry trade unwind. Very impulsive move lower, chopping, overlapping. And even as we made a higher high, it's still setting up for another push lower. So I'm in a position of authority on a short on the pound yen. I'm already, took profits, and we're sitting there in a position of authority. So the worst thing that can happen, it could rally and pip us out for more profit. But the monthly's overbought, the weekly's overbought, the daily's overbought, and we're expecting more downside in these pairs. And why are we having connection issues? I am somewhat verklempt as to why we're having connection, not responding. There we have it. So it's the platform, not the software. Software can't populate when the platform is not connecting. Interesting. All righty. So finish up on this. What's next? Well, we got some major downside potential. What I like about the pound yen is during financial crisis. We have the 2007 financial crisis over here. What happened? We plummeted a whopping 11, I think it was 13,000 pips during that. And then the dot-com bubble burst. You can use this little price range tool. You get the high, you come down to the low, about 9,000 plus pips, 9,200 plus pips. 2007 financial crisis. This was over 13,000 pips, if memory serves about right. Yep, 13,000, a little bit, even dipped just a tad bit lower. 13, almost 13.5. What's the next financial crisis? It's going to be called the Elizabeth, I'm coming to join you, honey. Is it definitely going to play out? My humble opinion, yeah. Our markets are showing that the ripping higher, the NASDAQ, the AI, we're hunting a bubble. And I suspect we're going to get a bigger correction. And I'm going to show you some graphs tomorrow that talks about it. I brought it up in the past. When you overlay this current price action that we're seeing in our markets, ES and NASDAQ, with the dot-com bubble burst, how they look eerily the same, overlapping on different scale, of course, because the prices are way different, but the overall move looks very similar. And I'll show you those tomorrow. But be careful on this rally, because we're due for that. Hey, we get the financial crisis, which we believe is coming sooner than later, but no later than later. And typically during the mass urgence of a market crash, people run to the yen for safe haven. So you typically see the yen strengthen during those environments. Amen? And what happened during the most recent carry trade unwind? Doesn't look like much, but that was 2,700 pips on that drop. From that high right there, I'll zoom in and show it to you, 2,700 pips, and it doesn't even look but a blip in the radar. Not high to low, about 2,700 pips. How you like that? Actually, it's a little bit lower than that, but I'll pull it just a touch more to get even with that low, right about there, around that 2,700 pips. Got it? So since that low, does that look bullish to anyone? Rip, chop, rip, chop, rip, chop, rip, chop. Now, some would say, yeah, that looks very bullish right there. Well, I like chart patterns. I like to see patterns within my Fibonacci's. And that pattern with the chop and overlap looks exactly like what we call a correction. That's the A. This chopping, overlapping, even with the higher high, is the B. And we need to come back down in a C, right there in a C. So this is why I'm short right now, in a position of authority, letting this thing go lower. Any questions? So what's the likelihood we go lower? Very high probability. And I expect this to go down and not only retest the magic fibbo on this daily chart, right? We talked about that the other week. We were expecting this thing to come down toward magic fibbo. We came awfully close. We're bouncing a little bit, but notice what's happening and where we're bogging down on. Anybody want to guess? Recent high, recent low. What are we bogging down on? Who could have guessed? Who could have thought? Who could have anticipated, ladies and gentlemen? We're struggling at what? The critical 618, 786 zone. But we're struggling at the 618. So what does that tell you? You got your first move down, correction, stopping at a 618. Next move down is lower low. Where's some potential targets down here? Where's the beef? Well, you got this prior swing point low there. That's viable right around that magic fibbo. You got this prior swing point over here. And then there's a tool you can use. It's called the Fibonacci extension tool. And it's a 3-point tool. You take the high, you go to the low, and you go to this lower high. And lo and behold, look who is sitting right at that prior low. 207, 206, potentially could go down to 204. So this is why I'm short here, and I'm still in a position of authority on the bounce. It's bogging down at the 618, which spells we're likely going lower low, because even on this shorter scale, this thing looks like it's got to take out a new low, which would put us right in our target zone. Amen? There you have it. So, what's the likelihood this thing breaks down toward the magic fibbo and these extensions? Extremely high probability. Got the initial move down. We got the retracement showing weakness. Now the likelihood we go lower low. We tested it the other day and came down, made a higher low. So we're still chopping, but the greater percentage is we go lower low. Then we break above the 618, 786. Then we start targeting 217, 218. It's pretty simple. This is where the rubber meets the road. 618, 786 zone. I always put it with my green box. So you use this little tool, and this would be the resistance zone up here. We break that, then we start targeting extensions. And right now we have our support zone, but as long as we stay below this, the probability we break to a lower low is much higher. Only way that flips the script is we have to close above this area to warrant going these targets up here. In the interim, we're more likely going lower low, and we're in a position of authority. Very interesting how this thing is still not correcting. Oh, that's what's happening. I'll try that again. I think the server is down. Let me check something. Yep, I'm going to have to check on that, see what's happening. Not allowing us to log in. Let me try closing and reopening. Will that establish something? Just doing a little maintenance here. Well, in the interim, we'll just keep going, and I'll come back to that. So any questions on the euro and the pound? For pound yen and euro yen, lower low. Euro yen, same thing. We got the exact same type of move. We got the recent high, whether you use this one or that one, they're pretty close. Well, that's the high and that's the low. We're not even reaching the 618. If you use this one right here, which is right at that 618, we're still testing it. And the likelihood we do what? Go lower low is much greater than we go breaking out. But if we can clear this hurdle, 618, 786, we could start targeting 188, 189. Otherwise, we use the 3-point tool. We got the high, we got the low, we got the lower high, and more than likely we're going where? 178, 170, well, 178.90, 178.20. So I think I said we'd go toward the magic fibbo. We did that. We're bouncing a little bit, finding resistance. So what's the next leg? Initial move, retracement, push lower. And we're in a position of authority. All right. All righty. So let's go to the markets. What's happening in the markets? We're due for correction. We've been on a tear. An absolute tear is what we've been on. So I think I already have it over here with my lines. Yeah, there we go. So Mr. Tucson, what are we likely to do? We're overdue. I did say last week we're likely to keep grinding higher, but a pullback is imminent. We're overdue for one. Do we just get a slight pullback to where we broke out from around that 72 and change, the continuation, or do we get a bigger pullback? That is the question. Well, zooming out, we reached the extensions. So typically when you reach your extensions, you're due for a correction. There's a small percentage that when you reach your extension, you continue the next extension, but more likely you get that correction. So yes, I do think we're going to see a little bit more of a correction, and we kind of zoom on this. And what I like is you go to these lower time frames. We're breaking below the 15-minute magic fibbo. Look for more downside. The 30, we're breaking the 30. Look for more downside. Where we're likely to go, test the hour. We're almost there. We got the hour starting around that 73.40 to 73.60 range. So another 20 points or so. This is a high probability. It acts like a magnet that we're probably going to come test the hourly. If we break below that prior swing point and close below the hour, then we're going to go testing the 4-hour magic fibbo. That's part of the software. You got to have the magic fibbo. You don't have a magic fibbo on your chart, you're missing out, my friends. So there's that low. We said in the 73, we're likely going to test. And if we break below that, then we're likely going to start pushing toward that 71 and change, 72. Right? So could get a pretty nice little pullback coming. We're overdue. We've just been ripping. And this is still likely, Harold. So short term, what's my short-term target to the downside? Right around that 73.50 to 73.60. Magic fibbo. Hint, hint, hint. Likely headed that way. We don't hold that. It opens the door to not another 100 points. Down to the 4-hour magic fibbo, which is sitting down in there. See the 4-hour? Well, there's the daily, 4-hour sitting there. And then the daily sitting there. So a little bit further. Do we come back and get the daily magic fibbo? It wouldn't be a shock. So typically what happens from this recent run, wasn't this a beautiful run? This was even a little unexpected to just go ripping that quick, that far, and that fast. But we talked about buying the low here, expecting this was going to make a run toward the highs. I was expecting to bog down somewhere around the highs and then get a bigger correction. Well, we got an extension, and I was looking for this to run into May, June, kind of bog around this area, then get a fall correction, then a blow off top going in the next year. Well, this is still on pace for that. Could we go a little bit higher? Yeah, my next extension, which you can see, we went right to it. So next extension is up around 75. Are we going to get that far? I don't think we're going to get that far until we get a bigger correction. And this may be the beginning of it. Because look at that move. That thing has been straight parabolic move with very little corrective action whatsoever. Amen? So, Mr. Tucson, if we got our targets, the 1 hour, we break that, we go toward the 4 hour. We break that, we can come toward this daily. Guess who's sitting around this daily magic fibbo? Well, you use the 2-point tool. You take the swing point low, you go up to the swing point high, and look who's sitting right in the neighborhood. That 618 retracement is right around the magic fibbo. So, who's sitting at the prior place we broke out from? We kind of tested these highs, got the correction we were looking for, then we went ripping. And since we broke out from that prior section here, we haven't retested it. So what if we just get that, my friends? we get this test of the prior highs that's sitting where? At 4-hour magic Fibbo. It's pretty interesting, right? Who's sitting right there at 4-hour magic Fibbo? Huh. Kind of confluence of events. Kind of chopped and grind, broke out. Even go further over here, but you can see that breakout. It's right in that neighborhood. So what happens if we don't hold the 4-hour? We come down and test the daily. That's a little bit further, but that's where the daily magic Fibbo is sitting. So I'm going to be watching for what? Further downside. Already made a couple more points just sitting here chatting about it. Most people die and go to heaven in a point or two. There you have it. So this is likely going to correct. Do we come all the way back to this prior swing point, which puts us closer and closer to the daily? And we don't mean this has to come down and drop that far, that fast in a day. No, but we can start chopping and grinding in a corrective action over the next few days. This thing is sloping upwards. So we can maybe intersect somewhere in between, and maybe we intersect close to where that prior high is to warrant one more push. Then we get the big fall pullback. What am I looking for in the fall as we move in towards September, October? I would love a weekly style correction. From the recent low to the high, we get a 618 retracement going into the fall. That would be a beautiful buy zone going into the end of the year. Get that Santa Claus rally, first quarter pop, and that could bring us, if we get that extension, correction that is, this low, that high, we get that 618 retracement around that 5,800 or so. That would be my weekly magic Fibbo. You get a 618 / magic Fibbo bounce where it intersects at the same point. That potentially sets up a blast off into the 9,000 range. What? No way ES could go to 9,000. Huh. Oh, yeah? Well, we already talked about the conservative target. We're already reaching that. I was expecting we'd get a correction before getting there, but we went straight up. So that makes the correction even more viable. And I'd like to see this start topping, heading lower into the fall, then blasting off to potentially mid-8s, even 9,000 up there. So just like I said during this latest correction here, great time to buy. Now take your profits, look for a correction. And if we can go into the fall and get that bigger correction and we get a weekly magic Fibbo / 618 combo bounce, then this would be a fantastic salivate area to buy again going into the fall, right? Post-fall, so fall, going into the end of the year Santa Claus rally, into next year, first quarter, maybe second quarter. Then what? After we get that blow off top, we're looking for more than likely a big correction / Elizabeth, I'm coming to join you, honey, maybe even a market crash. So there's cracks in the foundation. Yes, this punch junk euphoria, in my humble opinion, will continue, and we're likely going to go into the 75 and higher, maybe even potentially into the 8s, far exceeding, maybe crazy into the 9s. But in order for us to get up to the mid-8s and 9s, I think we need that fall correction. And for whatever reason, I think we're going to get prices are going to fall in the fall. So I was talking about this rally in May, June. We're kind of in that ballpark. We still got a little bit more time. It's, peeking into the middle of May, so we still could go a little longer. But as we go July, August, September, kind of October-ish is when I'm looking for the fall in the fall. Then Santa Claus rally, October, November, December, January, February type of thing. Do we get this correction and go up here to the extensions? If we get it, this becomes a good salivate point. You can go back in what we discussed over here. We talked about this in great detail. When we went up to make those slight all-time highs, all that overlapping chopping action, I made a bold statement. We need a new lower low before we can go on to all-time highs again. Sure enough, we grinded and grunted and took a few months to do it, but we finally did it. Then we talked about, hey, the software is reversing, got a weekly reversal, got a daily reversal. This is a great time to go long and look for this thing at least to rally back to the highs. Well, this thing far exceeded that. So now it's time for a correction. Now you're up another couple of more points. Died, went to heaven about 4 or 5 times now. And the bias is we're going to correct. Is this the fall correction coming? Possibly, because I did think this was going to rally in May, June, and we're in May, so it could be. Or do we correct a little bit more and give one more little push, then the fall, then the blast off? We shall see. But remember, go to the weekly chart, see where the magic fibbo is located, and see if we can get that pullback into the fall. And if it happens, what am I going to do? Salivate. We talked about a lot of great trades, and one of them was UNH. When we had that big sell-off, that it was going to go rallying back toward the magic fibbo. And we said you might consider leverage product, UNHG. Look at that run. Now this parabolic straight up move, I highly, again, I can't, no buy, sell to hold. I can't tell you what to do, but take profits if you haven't done so, because this thing is going to come back down. It's not just going to go straight up forever. Last time it did one of these straight moves, it wasn't even quite that straight. It took a tumble. So this has been on a run, but this correction should help this pull back. So definitely be in a position of authority and take profit. But we talked strongly when it was below double digits, right? Into the below 10. And great time. You're going to at least get a 618 retracement out of that. Look at it. Harold can't make this up, just like we did with ETHU and Ethereum. When we talked about this and that run, even if we get a 618, 786 retracement, went exactly there. Look at UNHG. This is why I'm taking profits. And yes, it could maybe go higher, but the only thing I believe in Kramer says is bulls make money, bears make money, but pigs get slaughtered. This is telling you it's time to take profits, not only on the technical picture, but we retrace right to the resistance zone. So I'm looking for this to find some resistance up here. So I'm going to put my little, let me clean that up and get my little box here. This is going to start showing some resistance in this zone. Perfect time to take a little profit. You more than doubled your investment in a pretty short period of time when we were talking about this. Time to take some profits. You bought hundreds of shares and sell a few. Maybe keep a few in case it goes higher, but this thing is ready for another correction. Where would be a correction point? You take the recent low up to the current high. We may need a little 618 retracement. That's a pretty good move from 20 down to about 13. Ouch. I don't want to see that profit evaporate. I want to just bank it. What if it keeps going? So what? I've already more than doubled that investment. That's enough. And if you still think there's more upside, you're more optimistic, then you leave a few shares run. But that's telling you you're reaching a resistance zone. We're likely going to get a pullback, especially with just ripping straight up. It's due for a correction. Amen? All righty. What about Mr. Tesla? It's trying to break out. I like it. We're expecting Tesla to go higher. I think I have that one on here too already. I keep changing my time frame. There it is with my lines. What's next? 522, 550, push up towards 6, potentially even going into 700. Still think Tesla's headed over here. Is it today, tomorrow? No. But we bought TSLL multiple times. We buy low, we sell high, we buy low, we sell high. Y'all remember what happened over here when Mr. Tesla took a big pullback? TSLL, we buy the leverage product. Back in October of 2024, right in this zone, it was below 10 bucks. I made a bold statement, not a prediction. I'll leave that to the prophets, but I made a bold statement. This is going to make a run. Tesla, the underlying, would make a run toward 500, and this baby would make a nice run. Let's go see what that looks like. Do I have it open on here? Let me see. Yeah, I do believe. So we go back in October of 24. And what happened in October of 24? Expect Tesla to hit 500, make a run up there, consider TSLL. Well, if you would have been involved and listened and watched the technical reasons why we're expecting this to go higher, you too could have, and go back, it's on the same chart there, Gary. So we come back over here, you too could have seen this beautiful run up from below $10. Actually, it's over here, below $10, run up to 41 and change. Then we did the same thing down here on this pullback. Went from $6 to 24 bucks, about a quadruple. Talked about buying the lows again on this latest pullback, and we're right back in it. So yes, Tesla hadn't made its run to 650 area. Still think it could go higher. How much higher can TSLL go? Even if we get a conservative run, we're going to go towards the mid-20s to 30s, this yellow zone. Do I think TSLL is going to get there? You betcha. Could it break out and go to the extensions? Tesla's going to have to make a big run. We got to go pushing 700, 800. We do that, then we're definitely going to come up here. But this is why we buy these leverage products without using options. And then we're able to take advantage of these doubles, triples, etc. Not bad. We got a quadruple plus below 10, went up to 40, a 4X there. Then the 6th zone went to 24. That's another 4X. And what are we expecting? This is going to run up into this zone. So do we get the fall correction? What happens if we get even lower? Well, Gary, you talked about the price falling in the fall. What if Tesla falls in the fall and we get a correction and we come back down? Well, I'm profit taking on that bounce. Nice 50+% run just right off the bat there in the last few weeks. Boom. Now what? What if we get that fall pullback? I'm looking to rebuy some of these lower numbers. Meta, MetU, a lot of these leverage products. Looking to buy during the fall when the prices go ripping into next year. Santa Claus rally, I'm looking to buy some shares and let them run. Amen? All righty. Meta, I have a huge upside potential on Meta. It's going to take a few years, in my humble opinion. This is not something that's going to happen today or tomorrow, but we have some big numbers looking at Meta. And I'm expecting a run up toward 1100 to 1300 range. Somewhere in that ballpark. Big run. If you look at the recent high to the low, we start clearing that 680, 700 range, 830, 890, 9. And here's my target zone up here at 12, 11 to 1300. Kind of split the difference right around that 1200 zone. That's what we're looking for. What do I think it's going to get up there? Absolutely, I think it's going to make a run toward 1200. Is this the beginning of a straight parabolic run? No. We may even get a bigger fall pullback, and then we go ripping in the next year, maybe a couple of years. But that is the plan. So buy some MetU, hold on to it. Why MetU? It's leveraged, right? Plus, you get a little dividends along the way. Not huge money. And again, looks like the server connection is a little bit down, but we'll show you this again tomorrow. Hopefully, it'll restore itself soon. But at least we can continue to do the charting here when all the platforms are kind of not showing what it needs to. But this is showing that we bought low, sell high, buy low, sell high. And even this little run from 18 up to 30. Almost a double. I take profits on that. All I can say is we get that bigger fall pullback. I'm going to be salivating to buy these lows and look for the runs. And I expect that's going to continue over the next few years as we go into 26, maybe 27, could even push even toward 28. This thing should go ripping higher, make new highs than we've seen on this relatively new bullish ETF. We're looking for this thing to go ripping higher as what? Meta goes up to 1200. That is the plan. So I buy some and then a rally almost doubles. You take some profits. What happens if it plummets and even goes lower into the fall? That's salivate country, right? Because then we make the run into the end of the year, into the next couple of years, and Meta runs toward 1200. This thing is going to zoom to the moon, breaking all-time highs. What if we can get this bet you right around that $15 or $10 into the fall? That potential could be a 5x to get back at the highs, or even a 6x to get to the 60s. I'll certainly take that. But that's what we do. We buy low, we sell high, we buy low, we sell high, we buy low. And is this the latest? And that's why I took profit. I was expecting the run, but then I was expecting a correction. And Meta hasn't been holding up as of late with ES and NASDAQ running the last several weeks. This thing's been pulling back. That's okay. So what happens if you bought some and you're waiting and you hadn't done anything? Well, if it goes lower, I'm going to buy more shares. I got some bids down here around 15. It fills, I'll gladly accept them. It goes to 10, I'll even buy more. What are you doing? Buying a falling asset? Yeah, because in the next couple of years, this thing should be at new highs. So I just buy, sell, and then as the run. So I'm expecting this thing to run up here, you betcha. How long is it going to take? Probably another year or two. I'm definitely looking for the fall decline. Then we go into what? Into the year rip into next year. And even if we go from, say, 20 to 40, I'll be taking profits, even though I know Meta's probably going to go in the next few years up toward 1200, which would push this even higher. Plus, you get dividends along the way. They're not showing right now because of the connection issue, but it still will show when we do get that. Let me see if I can refresh this page. Will it give me something? Might close the whole thing. Let's see. No? Very peculiar. All righty. Well, just deal with the technology you dealt with. We just make the best of it. So let's continue. What about NASDAQ? It too needs a correction. Look at that run. That is insane, my friends. That's on a weekly chart. Look at that run. But most recently, we had NASDAQ made an all-time high over here in October. We had this pullback. So let me start zooming in. This is in the archives, but we went through this in great detail, right, Harold? We had that high, we had this low, we rallied and could not make a new high. And I was talking about the technical picture. The fact that we failed to make a new high, made a lower high, that screamed we needed a lower low. So for weeks and even months, I said, be careful. We're going to end up getting a lower low. Uh-oh, now we're talking. Can't be reached. Reload. Yep, I shouldn't have done that. Well, we'll just continue here. Hopefully it'll allow me to update it this way and continue my story. And we were looking for that correction. We got the lower low, again, which was over here. Got that lower low. And then we said, what? Time to buy, salivate. We're going to make it run back toward all-time highs. Didn't expect this to go ripping that far that fast. But the plan weeks ago, when this low appeared, I said, what? Look for this as we go into May, June to go ripping higher. I was expecting to kind of maybe retest that upper zone and bog down. Well, we went far exceedingly. Why is it time for a correction? Look at that run. Very impressive. Use your 2-point tool. that recent high over here down to that low. We've even reached the 1618. Kind of ping pong. We grinded to the 1448, got a little pullback, broke the 1448, went to the 1272, pull back to the 1448 where we broke out from that little move, went up to the 1618. Now we're due for a correction. So what's a good area for this to pull back? We didn't quite get what I was looking for when we initially broke out. I want to see a little bit deeper, but we stopped at the 1448, went higher. We're due to retest that prior breakout. Is this the beginning of that? Perhaps. Or maybe we get a little bit of dip and we go just a little bit more, then we hit the fall pullback. Look for those zones. Where's a good area for us to pull back in the fall zone? Somewhere around this magic fibbo, maybe even deeper. So 2.2, we got the low, we got the high. My 618 is right in the neighborhood of this daily magic fibbo, but I would much prefer to see that deeper retracement off of this Liberation Day low over here up to the current high. That's a beautiful 618 retracement combo. I've been talking about that for a while now. So Harold, what I'd love to see into the fall is a big retracement down to the weekly magic fibbo. Bounce off the magic fibbo, that sets some extensions toward the upside. And how does that work? You use a 3-point tool. So I'm going to take some of these off so you can see a clean little scale here. Take this one off. Remove. Now remove this last one. So where would we potentially run using the 3-point tool? Well, and we take the low, we go up to the high, we get that Fibonacci retracement toward the weekly magic fibbo as we go into the fall. So that would put us over here, September, October, just looking at the scale down there. Somewhere September, October, something like that. And we make a move toward that 618 retracement, which was what? I've got to put a few more lines on here. That high to that low. And we get the fall correction in toward the magic fibbo combo, 618 magic fibbo bounce. Then it sets up NASDAQ going into the 30s and even potentially pushes toward 41, up to 40,000. Wow. That's a hell of a move, right? Well, I'm going to show you that graph where you overlay this recent run and that of the dot-com bubble burst, and you overlay this, and this was showing that scale that we talked about, NASDAQ going to 40,000. I'll bring that slide up tomorrow for you. But this would be it. We get a retracement down at a weekly magic fibbo combined with a 618 magic fibbo bounce. Minimum, we should go to the mid 30s, 34, 33.8. That's just the equal A, B, C. And if you get the combo bounce combo, then you typically start pushing toward a 1618. Has the potential to do it. So could that graph I showed months back overlaying the dot-com bubble burst with the current price movement and how it projected potentially 40,000 before we got the Elizabeth, I'm coming to join you, honey? Eerily familiar, isn't it? So any questions? Be careful on the upside. Punch junk euphoria is taking over, but this cannot just go vertical forever. What happened to Carr? Avis, baby. Remember Carr? I don't know if it's going to pull it up because I didn't have that slide open. Still not corrected. Interesting. Wow. So anyway, I'll show you that tomorrow. Carr. Scan disk is going to the moon. That thing's going to come tumbling down. Psychology of a market cycle? Well, this rally is overdue for a pullback. Where would be a good area? Back where we broke out from. Recent low up to the current high. Guess who's sitting in the neighborhood of the recent breakout? 618 retracement. Even on a daily, my magic Fibbo is not too far away. So is this possible? We correct down toward a daily magic Fibbo, push into June, right? May, June, then we get July, August, September, October. Or because we did such a run so quickly and so dramatically, maybe we're starting this fall pullback already. But I would be very careful on this pullback. It's overdue, way overdue. And a great area to test would be somewhere around that 26 and change where we broke out from. We're overdue to retest it. We went vertical. Since then, nice time to retest the breakout to potentially go higher, come back to the magic Fibbo to go higher. If we start breaking below the 618, 786, then it starts opening the door to that fall pullback, which puts us into these extensions, which is what? My weekly magic Fibbo. Perfect. So for whatever reason, I have that fall pullback. Is this the beginning? Well, I'm not guaranteeing we're going to fall all the way down here straight down, but I do think we need a correction. And yes, we could correct and go a little higher and then into the fall because we still got time. Or this may be because of that outrageous run, we need a deeper retracement now. So be careful. I do expect more downside, hint, hint, hint. And likely a good test would be somewhere around that 26 and change where the prior breakout was. So you're talking maybe 1,000 points or so. Could happen very quickly, down 500 plus today. Be careful. Let's continue. What about black gold Texas T? Be careful with this. This is a holding. We get above this resistance zone. Yes, we got several levels to go. We got to get above that prior high. We got that prior high and the last one on May 9th, March 9th and 10th. We had that high over here. We had the low the next day. And we've been stuck for the last several months since that May 9th and 10th. We're stuck in that zone. We retraced and did a 618 retracement and we're holding. We break the high, it sets the tone. We're going 125, 130. And if we can break above that prior high, guess where we're headed? 150. And people don't understand the oil process. Well, Gary, we were at, 105 and gas prices were much lower. And months later, we're at 105 and gas prices are much higher. You got the distillates, you got the process, you got the way things, you don't just throw WTI crude into your tank. It has to be manufactured, right? Go through the distillation process, et cetera, et cetera. And you don't just throw crude into your diesel trucks or your boats or jet fuel or any of that. All that has to be made through a process. And just because price is still in the same range, all that distillate scenario takes time. That's why prices take longer to fall. I still don't like the fact that our oil production is greater than it's ever been. Why should prices in the United States go higher because of global issues? I digress. But supply and demand says when supply is short, demand is high, prices go ripping. What's wrong with the page right now? Prices went ripping, but what? Supply is overwhelmingly high. Throw in with Venezuela, millions of barrels we're getting from them. Plus, we're producing more oil and gas right now than Russia and Saudi Arabia combined ×2, pushing toward ×3. So why is our prices going higher? And damn market makers, I tell you. I digress. But be careful with this. This thing could be at 150 before we know it. This holding and setting up, we get above this hurdle. Yes, we got resistance here and there, but breaking this pink box sets 130, 125, 130, basically 150, right in there. So we clear the hurdle. We start closing above this level. More than likely, we're going to 125, 130. We get above that, I'm saying we're going to 150. Nice roundabout number. What happens if prices go to 150? It'll be ugly. Gas prices will continue to rise, be ugly, but then I'm looking for this thing to go plummeting. So the higher this thing goes, the more it's going to plummet back down, because nobody can survive at prices that high. Businesses, you think, well, oil companies love it. Yeah, Valero and MPC and what? Phillips 66 and some of those. Yeah, they love it for a minute. But even then, all the distribution costs more, cost of living costs more, their employees are struggling with the prices, et cetera, et cetera. I digress. But you can't survive with oil prices way up here. You can't survive with oil prices drill, baby, drill down here. So we got to normalize somewhere in that $60 range. So the higher we go, the more we're going to fall to get back down there. So be careful. This isn't a guarantee. This is still chopping and overlapping. So this technical picture, whether we pop to 150 first, we're still got to come back down to the normal area. That 60 to 80 range is kind of normal. So the more we go up, the further we're going to fall. So be careful. Brent crude right now is a little bit higher than our WTI, West Texas, but it's still, this technically could set up a pop. All I could say is if it does it, a nice shorting opportunity. Maybe we buy some SCO, which again, SCO should go popping higher when oil prices go plummeting lower. Oil prices up today, SCO is down today. Inverse relationship. All right, so that's the plan. I'm going to buy a bunch of SCO. Should we rip up to 150 or higher, the higher it goes, the more I'm going to keep adding. And then when oil prices come plummeting back down and this SCO goes popping, then we'll take some profits accordingly. So you remember, it wasn't long ago when we were talking about technically we need one more little push lower before we'd go up to 100. With the exception that if rockets went flying in the Middle East, and that's exactly what happened. And we went right to that target. Harold, wasn't that long ago when I kept saying, after we get down here, this is salivate country for this thing to go ripping. We didn't quite reach the target, but rockets did go flying, and we went right to where we said we were due. You go out to that higher time frame. We were looking for that 618-786 retracement. We got a little exceeded that. We talked about 100. We went to close to 120. Wow, that's pretty impressive. Now what? Do we make one more push? Maybe. I wouldn't be shocked if that happened. Rockets keep flying and we keep seeing this scenario. This thing could pop to 150 very quick, but I have a strategy. We get up to 150 and higher. What is it? I'm going to buy some SCO shares and hold them so that when this thing goes plummeting back down, that should go pushing much higher. Amen. No buy, sell to hold. Can't tell you what to do, but that's the plan. So have a plan. When it executes, trust the gauges, trust the software, trust our ability to reinterpret price and take advantage of some of these moves. Amen. All righty. What else? So again, in closing on Black Gold Texas T, this holding of the 618 is danger, 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 Will Rogers. Yes, we got major resistance above. I'm not trying to tell you we definitely going to go breaking out. I just have a strategy if we do, and we're pushing that 130 to 150, start nibbling. Then as it keeps going down and down and down, that baby will start going higher and higher and higher, making a little profits. We're definitely due technically after that run up. This overlapping chopping action suggests we still need a lower low than this low over here we made on March the 10th. Had a big range. March 9th up here high to the March 10th low. We're stuck in that range. Probably expect more of the same, but what a hell of a range. Normally, you kind of drift in a small range. This thing put it way out of proportion, but it's massive zones in which to take advantage of. Amen. So are we definitely going to go breaking out? We get above this pink box, the probability is extremely high. We start breaking below the support zone, we're likely going lower low. So be sure you take aggressive profits, whether you're long or short. Be aggressively taking profits, because just like the other markets, we're stuck between resistance, we're stuck between support, and somebody's got to give. And the strategy is we go way up to 150 or high. I look at buying some SCO, because this thing will come tumbling back down. And when it does, this thing's going to go spiking higher. Amen. All righty. Let's continue. What about crypto? Cryptomania. Bitcoin. We kind of pegged this over the last several months that I don't think this 60 and lower is it. I do not think that is the bottom. And I can't really pull up my other charts because I didn't have it open. So without this connection, I'm all stuck with what we got. But this was expected to grind. I'm not convinced that this is the end. I still think we'll make a run toward that 90 to maybe 115, somewhere in that zone. We were thinking this was going to grunt and grind its way up May, June, then kind of work its way down into September, October, somewhere between that 50 and 30,000 range. This is the bullseye. So like we've been saying, whether or not we go higher, we did expect this grind higher toward the magic fibbo. We're stuck on the magic fibbo like glue. Is this the end and we're breaking down, or do we get another push? Because we're still into the zone. We talked about this correction going up to that 90 to 115 zone was May, June was kind of the timing. Well, we're in May, we got the magic fibbo. Do we kind of push into June, then get the fall pullback into that 50-30? Bottom line is Bitcoin hits 50,000. Nice time to add to your position, start buying. We push lower to 40. Be thankful it gets that low and buy some more. And if we push anything below 40 into the upper 30s, mid 30s, I don't think we're going any lower than 30. But if we get anywhere in the 30s, that is a smorgasbord time to add some Bitcoin in your crypto account, buy some ETFs, whether leveraged or not, depending on what you want to play with. I'm going to buy a little bit of all the above. And we know the cycles on Bitcoin every 4 years. And again, I don't have all that marked like we normally do, but every 4 years, you get a big 12 to 18 month run post halving, get a big crypto winter correction, next halving, 12 to 18 month run, big correction, 12 to 18 month run, big correction. We're still in the midst of that correction. We talked about it in 2022 when Bitcoin is below 20,000. I was preaching to the mountaintops going, dude, you're able to buy Bitcoin below 20,000 is a steal of a deal. It's like committing a crime to buy Bitcoin below 20,000. That was after Sam Bankman-Fried and all this bad press and this, it's a scam, it's that. I was like, nope, buy it. We're going to make a run toward 150 to 170. Well, please forgive me. We only went to like 129 and change, 126 and change. So still below 20 to 120 and above is a hell of a run. Now, again, I'm going on record to say that 60,000 is not the low. In my humble opinion, we're going to make a run toward that 50 to 30,000 range. That is a massive buy zone. So that 50 to 30 is the same as that 20. So 50 to 30 down here is the same as it was for this 20 and lower. And yes, we made a run up just shy of my 150 to 170. Well, this run up should go into 200 or higher. So a massive run coming when? Next halving is in April, May of 2028. Then we buy low in 26, probably fall, which is my 50, 30 zone. Buy some at 50, goes lower, buy some more, goes toward 30s, buy more. That is unbelievable deal. Then you hold it till when? Fall of 2029, which is over here, not this over here, but over here. Fall of 2029 is when we're expecting this thing to go ripping toward 200. So on a weekly scale, we can see where 28 comes in. We got the halving, then 12 to 18 months. Any questions? So every 4 years is a Bitcoin halving. Post halving, you go on a 12 to 18 month run. Rinse and repeat, rinse and repeat. I don't think the 60,000 is the low we're going to see. I think we're going 50 to 30. Any moment, today, tomorrow, next week, in the fall, Bitcoin hits 50,000. Not a bad idea to put a little something in your bank, meaning you buy some Bitcoin in a broker, you buy some ETFs, some leverage, however you want to play it. BitU, BitX, iBit, the many ways to play it, including buying directly in a crypto account. And then what? You hold it in fall of 26 to the fall of 29, 3-year investment. And if you follow that rule, buying below 20, 3-year investment, 18 months later, you're up 126, not bad run. You rinse and repeat. You would have bought around 5,000 last cycle, could have sold at 60, even topped out about 68, not bad. Then over here doesn't look like much. You could have bought around 2,000, sold around 17,000, 19,000. So rinse and repeat, over and over and over. That is the plan. So in closing, is this the end of the run? I'm not convinced it's the end of the run. I still think we're probably going to push a little higher. And the plan was to get somewhere around that 90 to 115-ish. I'd love to see that run where all the, they like to call dumb money, or the uneducated, non-GPA trading services students, know better. When it runs up here, we're not buying in this zone. We're looking for this to go down to 50 to 30. That's when we buy. Amen. So if you're trading this scalping up, we're going to be taking profits up here. But if we can get that push where everybody thinks, ooh, Bitcoin's breaking out, my friend, look out, you're missing FOMO, fear of missing out. Then we get that big fall plunge as we want to buy. So I'm not convinced that that is the low. I still think 50 to 30 is the way to go. And don't pay attention to the scale down here. We're talking when? 2026 we're in. We're just talking fall. So if you go back through the highs and the lows where the peaks occurred, 2018, 2017 over here was the high. Then we had the high of 21, the high of 26. You do the math every 4 years. So when's the next high going to be? Having in 2028. You do the math, 4 years from 25 is what? 29. And where should it be in 29? Somewhere, in my humble opinion, 200 or higher. Got it? So that's the plan. Tops out every 4 years. It bottoms every 4 years. It bottomed over here in 22. It bottomed and going to bottom in 26. All right, everybody good? Bottomed over here each time, 18, 22, 26. When's it going to bottom again after the high in 29? 2030. Rinse and repeat, 4-year cycles. That's based on Bitcoin halving. So any questions? And I think this run is over? No. I don't think this is quite over. It may be. I was definitely looking for this type of move going into May, June. Still got a little something left on the June scenario. I would really like to see that bigger correction. Why did those targets come into play? Guess who's sitting there? From the high down to the low. Why are we looking for that 90,000 up to maybe 115? 618, 786 zone. Correction for last push into the 50 to 30 range. So Harold, can I guarantee we definitely going to go that high? No, I can just guarantee if it hits 50, I'm buying. It hits 40, I'm buying some more. And if it goes anything under 40,000, 39, 38, 37, 36, 35, 30, anything even approaching 30, smorgasbord. Hold it to when? Fall of 2029. Amen? Rinse and repeat. And again, the halving is sitting out there in April, May of 2028. So it is a 3-year buy and hold scenario. And yes, there's ebb and flows, even on the midst of the run. There's some big ebb and flows in there, but it still ultimately plays out in that time clock. No reason to believe it's going to change. And many people say, well, with ETFs and with all the big dogs involved and all this, you still got the big whales out there that have thousands and thousands of Bitcoins. That's still pushing the roost here. So until it changes, expect more downside eventually, and probably going to get a little bit more upside. Would love to see it start to push the barometer where everybody thinks it's going breaking out, and then you get slammed. When all the market thinks, woo, we're going breaking out. Crypto has bottomed, I'm telling you. Then we get the big plunge when everybody goes to the same thing, and they're licking their chops, going, I shoulda, coulda, woulda, shoulda. I should have taken profits. I shoulda. And then a lot of the dumb money starts buying up here, and they think it's going there, and it does this. And they cry and they do panic selling down here. We're going to buy every bit of it that they sell. We want to see some panic selling down in the 50 to 30 range. Remember, that is your opportunity of a lifetime buy. Amen? All righty. So let's recircle the wagons here. Start off with the dollar index. I'm still expecting, even with this bounce today, still expecting more downside. Could this be the end and we go breaking out? Maybe, but the percentages are still going lower low. So in the short term, I still think any rally should be sold, and this should whimper out, continue lower. But let's see if I still have those on this original one. Let's see if I put it back to the dollar index. Will it give me my boxes back? No, unfortunately. But I have my resistance up here, got my support. So we have extensions. We're likely going to go lower low, higher probability than we're ready to go breaking out. Even though long term, we're definitely going that 130, 140 target. Amen? All righty. What else? ES, NASDAQ, etc. Looking for a deeper correction. So I do think there's more downside. We went through the process. We're below the 5-minute. We're below the 15. We're below the 30. We're testing the 1 hour. Remember I said that is going into class. We're likely going to test it. We start closing below the 1 hour, not a wick, but a candle body. Then we look for lower low. Could this be the end and we start breaking out under this punch junk euphoria type market? Anything is possible. But after this crazy run, I still think we're in for a deeper retracement. I would like to see, when you see back on the 4 hour, we haven't visited the 4 hour since April. That's, a few months. April, May, a month plus. You typically don't stay away from these magic fibos on the lower scale for very long. Hour, we hadn't touched it since May, back on May 4th, and then back here in April. 30-minute. Almost touched it in May. We touched it back here in early May. So this is why we need to come back to visit. You don't stay away from the magic fibbo for very long. And then when it starts to turn over, there are high probability targets to test. So this bounce here, I'm not looking for this to go breaking out right now. It's not deep enough, I don't think, right? It's just kind of retesting the zone. Could we bounce a little bit here, get a little bounce, kind of suck some people in? Yeah, and then go lower. So still think a high probability is what? Harold, we close, not a wick, but a candle body below this magic Fibbo. We're looking for this to go lower low, which would mean likely making a run toward the 4-hour, which kind of ties in with this latest grind all-time highs. We chopped for a while before we broke out. We kind of broke up, retested again. Notice we're in that neighborhood. So this may likely end up with this correction coming testing the 4-hour. We can't hold this little zone here, and we can't hold that. We start closing below the 4-hour magic Fibbo. It sets the tone for the daily magic Fibbo, which is sitting around that 68, 6,900 level. So big picture, we're due to test the prior breakout over here. We don't hold that. Likely going to do a 618 retracement, which happens to be the magic Fibbo. And what about the fall pullback? I'm expecting the fall pullback to go much greater than a daily, making a new low, going much deeper. So you go back from this high, low to high, you're talking more like a 618 type of retracement off of that Liberation Day low. And that would be my weekly magic Fibbo into the fall would be ideal, my friends. So what is that on a weekly chart? Again, it is the Liberation Day low up to the current high. And you see right where that 618 is. Beautiful. So is this the fall pullback? Get a 618 combo bounce magic Fibbo. Then you set up potential to the 30, on this one, mid eights, maybe even 9,000. That's that 3.2. You got the low, you got the high, you get the fall pullback around that magic Fibbo, set up the mid eights, maybe even pushing 9. That could be beautiful. All I know is, Harold, just like I said, when oil prices reach 150 or higher, if it gets there, I have a plan, I have a strategy. Well, what if we get the fall pullback and we come back toward that magic Fibbo on a weekly chart? I'm buying. Just like we talked about buying here during when we got that lower low, to buy there and look for this to run up in May, June. Well, not so bad. Did it beautifully, even exceeded expectations. So we get this fall pullback. I'm buying going into next year. And stratospheric type of move if we can get that nice hardy pullback. That would be setting up on the charts at least the 8s, if not pushing 9. Got it? All righty. Do the same thing for Mr. NASDAQ, and it's like rinse and repeat. You have the low, Liberation Day low, you got the high. We come into the fall and we push that 618 type of retracement, pushing us down near the magic Fibbo / 618. And then where does that leave us? Potentially going up to 40,000. What? Liberation Day low up to the high. We get that fall pullback. 30s, pushing potentially 40. Wow. And that fits that overlap of the dot-com bubble burst, overlap with the current price action going into this. And I'll show you that graph tomorrow. So any questions? Is this the bigger pullback now? Maybe not. Maybe we just pull back a little bit. We get one more push. So what would that do? You just kind of raise it a little bit more if we go higher high before we get the fall pullback. But the fall pullback I'm looking for is 618 type of retracement. And if it intersects with the combo, maybe this is already that. And we're starting off early because we got a little bit bigger run up than I expected into May, June. Maybe because of that, we're already starting the fall pullback. But you get the point. All I know is this is, like we said here, salivate to buy the Liberation Day low, salivate to buy that lower low coming into May and June, right? When we're in April, we said there's a great April, May, June type of run. We got it. Now we're looking for what? The fall pullback. Is this the beginning, or we go just a little higher than we do it? All I know is we get that fall pullback into that 21,000-ish range. Salivate to buy it for a big run into next year. Okay. All righty. We didn't look at the Russell, but Russell's in the same boat. Big run up. We hit our extensions. We talked about the high probability trade from that recent high to low. We reached extension. I still think we're definitely going higher to that on IWM, that is. Well, this is Russell, that 3,000-ish move, which I still think we're going to get to it, but we do need a correction. IWM is the way most people trade that. We did reach the extensions, talked about that high to low. We got the extensions. So yes, I do think we're going to 300, 315 area. Still high probability, but we do need a correction. What would I do with this? We talked about using UWM leverage product when we were down at this correction, looking for that run toward these targets. So I said the other day, for those of you that took advantage of it, when we bought down here in the mid-20s and we're almost tripled right there, right? Triple, that it was time to take profits. Time to take profits. I'm looking for a correction. And if we can get a big correction into the fall, which would be ideal, then we can rinse and repeat, looking for this to go higher into next year. When this makes its run to 305, maybe even get the stratospheric pullback. I'll go back to IWM. That's the underlying. So if we can do the same thing, Harold, we got a low, we got a high, we get that 618 magic Fibbo combo bounce. That potentially sets the tone for us to go into mid 300s. Mid 300s. How do I get the specific numbers? Use the 3.2, swing point low, swing point high, retracement toward that 618 zone. That would be in the mid threes, potentially even 4. Sounds insane, but hey, we can get that fall pullback. It's salivate country. Like we talked about buying Liberation Day. We talked about this thing after the pullback going toward these extensions on the top side. We reached them. Now it's time to take profits. We get a fall pullback, rinse and repeat. Potentially could put us in the mid 300s. Wow. But I still think my target up at 305 to 315 is still very viable. Could we get a small correction and get the 310, 305, 315 zone and then the fall pullback? Sure. Amen. But definitely be in a position of taking profits because, like I said, this we suggested almost tripled from mid 20s to 60s, right around close to a triple. So that's certainly time to take some profits. And last but not least, don't forget about the black gold Texas T. Be careful with this. If we can go breaking out, we're going to go up to that 150 target. If we break down and don't hold it, we're really going to come tumbling back down. So strategy is we get to 150 or higher, I'm buying some SCO because then I expect oil prices to come back to reality and this thing will go spiking. And last but not least, our gold trade. We forgot to look at gold, so I'll do that real quick. Gold still expecting to go lower low. We talked about this in great detail, that this initial move, I didn't think this was the low that would be the end. It's possible, but this on that latest move looks like the 1, 2, 3, 4. We still need a push lower. Amen? Still looking for that push lower. So what's the secret? On this latest little A, B, and this is still C continuing, right? That's the A, that's the B, And why is C continuing? Because this looks like the little 1, 2, 3, 4. We need 5 to push to finish that C. Got it? Why is that? As long as price is below 5,000. 5,000. See that little swing point low right there? That's 5,000. That's my wave 1. Right there. That's a wave 1. This correction right there is wave 2. Very impulsive push lower was 3. Now wave 4 is an impulsive move, cannot go into the area of wave 1. It can go up to it and reverse, that's fine, or lower like it is. So as long as we're below 5,000, anticipated move is to make a lower low. Amen? Lower low. That would be my A, B, 1, 2, 3, 4, 5, making the C, and then we look for the blast off. So in my humble opinion, as long as we're below 5,000, look for this to break down and make a lower low. Sweet spot is 3,900 to 3,700. Anything lower than that is gravy. So we can see we're talking right around this 3-day magic Fibbo zone. We're up at 37, kind of pushing higher. So ideal mark is that swing point low into the 4,000s. So 39.37 is a perfect place, and that's the buy zone. We go lower than that and we say, the bigger push. If we can get anywhere near this weekly magic Fibbo, now I'm not trying to tell you we're definitely going to go that low, but man, if we can get down here to that magic Fibbo on a weekly, talk about opportunity, because the next run is 7 to 10,000. Now, if, ladies and gentlemen, keep this on your chart, if we break above 5,000, then we're looking for higher high. But as long as we're below 5,000, especially below the recent swing point, which is still below 5,000, this like we're the beginning of a surge lower. So I'm looking for, yet again, this looks like a 1, 2, 3, 4 pushing 5. And on this last 4 going down in 5, I'm looking for a brand new subdividing 1, 2, 3, 4, 5 arrow. So it looks like we got what? This is very impressive. You got the high, you got the low, and where are we bogging down at? Anybody want to guess? Anybody? Anybody? 618 failure. So that's representing what? Lower low. And we're likely need to clean this up by going lower than this low. So if this is the beginning of a 1, 2, 3, 4, 5, that's why I'm thinking 39, 3,700. Anything lower than that is a gift. Amen? All righty. Now you use a 3-point tool, Mr. Tucson. We got a high, we got a low, we got a lower high. Look at where this should start to push. 1, 2, 3 should push us down toward that 1618 or lower. Then we get a little 4 and we get a little 5, and that puts us right in that 39, 37 zone. All I can say is when it reaches 3,900, I'm buying. Reaches 38, I'm buying some more. Goes to 37, I'm buying some more. Goes to 35 or something even lower, get on your knees and go, thank you. Because the lower it goes, the higher it's still got to go to our target up here at 7 to 10,000. Amen? And if you go back way back in time, when we saw this 1900 top and reversal, I made a bold statement that we would go to 1,000 before we broke out and made a run toward 3 to 5. Well, it did exactly that. So this is the bold statement again. How we get down 4,000 and lower, that swing point low is nibble time. And if we go lower than 39, 37 is ideal. Lower than that, we get a weekly type of Fibbo retracement toward that 3,500 or so. Man, that would be awesome. Because what? We get to 3,500, say, then we got at least a double, because 7 is the beginning of the target, and could be a triple because 10 is the top of that target. Beautiful. Beautiful move. So are we going to get the lower low? Yeah, as long as we're below 5,000, look for this to start ripping lower. Could take days or weeks. I'm not trying to say ripping means instantaneous in the next few minutes. Stay below 5,000. Looks like we got to go lower low, and we should push toward maybe this 4110 would be a nice area for that wave 3 to find some area. Low retracement 4, last push 5. So 39.37 is ideal. And if you'll recall on that train, a gold train, it was never going to stop. You just keep buying, you make money. What did I warn you? We need at least a 4,000 correction. We got that. And based on this price action, we're still not finished. And in my humble opinion, if I'm wrong, we break above 5,000, something else is going on. Amen. But anything lower than 4,000, that spike right there, which is highly probable we need to go lower low, buy zone. Come down to the weekly, back to truck up zone, because this is like blessed zone we get way down here. I'm not trying to tell you we're definitely going to get that far, but we call that salivate country if we can get that low. So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. Even when technology rears its ugly head and you don't have the proper connection, we can still send smoke signals, right? And this is still the plan. So take care, God bless you. We love and appreciate you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all. We'll see you tomorrow.